He opened his phone at 6 in the morning on May 10th. His savings had been worth $400,000 the night before. His balance now showed just under $12,000 remaining in his account. Nobody had hacked him, and nobody had stolen a single dollar from him. Just 2 years before that morning, Marcus had seemed to be thriving. He was a software engineer, 34 years old, based in Austin, Texas. He owned a home, paid his bills on time, and saved consistently. He had built exactly what financial advisors tell every American to build. So how did a responsible man lose 97% of his savings? How did a currency designed specifically to be safe destroy everything instead? And why were hundreds of thousands of Americans standing in that same wreckage? This is the full story of the night $40 billion disappeared. By the end, you will understand a trap that millions of Americans fell into. Marcus grew up in a working-class family in central Ohio during the 90s. Money was always tight, and he watched his parents struggle with every bill. He decided early that financial security would be the foundation of his life. He studied computer science, graduated without debt, and found solid employment very quickly. By 2019, he was earning $90,000 a year at a tech firm. He and his wife bought a modest home and started a family together. Over 5 years, they had carefully saved $400,000 in total. That money represented every sacrifice, every skipped vacation, every overtime hour worked. Then, in 2020, he started hearing about a new kind of digital currency. Everyone around him in the tech world seemed to be talking about crypto, but Marcus had always been skeptical, and he was not a gambling man. He had worked too hard for too long to risk his savings on speculation. Then, in late 2021, a colleague introduced him to something called TerraUSD. Unlike regular crypto, TerraUSD was specifically engineered to always be worth $1. It was backed not by gold or government, but by pure mathematical algorithms. A paired token called Luna would automatically maintain TerraUSD's stable $1 value. The system had been designed by brilliant engineers and endorsed by respected institutions. At its peak in April 2022, the Terra ecosystem was worth $41 billion. Over 18% annual returns were being paid to TerraUSD holders through Anchor Protocol. 18% annual returns on a supposedly stable coin felt almost implausibly generous. Everything appeared legitimate. The technology was real and the math seemed sound. Marcus did something he had never done before and researched it deeply himself. He read white papers, watched technical explanations, and consulted 2 people he trusted. By January 2022, he had moved $140,000 into TerraUSD. It was not impulsive. It was the most carefully considered financial decision he had made. By April 2022, that same investment had already grown to $160,000. He had been right. The stable currency was doing exactly what it promised. On May 7th, 2022, something small happened that nobody initially paid attention to. A large anonymous entity began rapidly selling enormous volumes of TerraUSD on exchanges. TerraUSD's price slipped from exactly $1 down to 99 cents overnight. That single 1-cent drop was supposed to automatically activate the stabilizing algorithm, but the selling pressure was too fast and too large for the system to absorb. As Luna was minted to restore the peg, its own value began collapsing rapidly. As Luna's value fell, it took even more Luna to maintain TerraUSD's dollar peg. This created a death spiral, a feedback loop the designers had never fully anticipated. On the forums and Reddit threads, people started noticing and asking quiet questions. Marcus checked that evening and saw his balance had slipped to $130,000. He told himself it was just a minor correction and closed the app. That night, the algorithm that was supposed to save everything began to break. By May 8th, TerraUSD had dropped to 80 cents and was falling fast. Luna, which had been worth over $100, dropped below $10 overnight. Marcus woke up on May 9th to find his balance under $60,000. He sat in his kitchen in complete silence while his wife slept upstairs. He tried to sell, but the platforms were overloaded and transactions were failing everywhere. Hundreds of thousands of people were all trying to escape through the same door simultaneously. By May 10th, TerraUSD had collapsed to just under 10 cents and still falling. Luna, at this point, had fallen to a fraction of a single cent. $41 billion in total market value had evaporated in under 72 hours. Marcus's $400,000 had been reduced to approximately $12,000. That money had been a planned down payment on a home for his family. It represented 5 years of disciplined sacrifice that would never come back again. He had never told his wife exactly how much he had moved into TerraUSD. That conversation, when it finally came, was the hardest of their entire married life. On Reddit, thousands of identical stories appeared in real time through that terrible night. People had mortgaged their homes, emptied retirement accounts, and borrowed from elderly parents. One documented investor had converted his entire life savings of $900,000. It was all gone before he could even reach his computer to try selling. Here's what made the TerraUSD collapse different from every financial disaster before it. The people who lost everything were not reckless, naive, or carelessly foolish at all. They were engineers, teachers, nurses, and small business owners who had done their research. The first lesson is that 18% annual returns should always raise a red flag. When something offers returns far higher than anything else available, the question is always why. The second lesson involves something called concentration risk, a term most people never learn. Marcus had placed 35% of his entire life savings into one single asset. Any single point of failure at that concentration level has the power to destroy you. The third lesson is the most important and the most psychologically uncomfortable to accept. Just because something is complex does not mean it is safe or sufficiently tested. TerraUSD's complexity was not a protection for investors, it was actually their blind spot. People trusted it because they could not fully understand it. That was the danger. Marcus eventually rebuilt, not to what he had, but to something much more modest. The Terra blockchain was formally halted by its own developers on May 27, 2022. Do Kwon, the system's creator, was arrested and charged with fraud in 2023. The $41 billion that vanished in those 3 days was never recovered. And the question Marcus asks himself never fully disappears, even now, years later. If he had simply left that money in a basic savings account instead, what then? If this story changed how you think about money, please share it with someone.